Every financial empire reaches a moment when its power becomes so absolute that it transforms from participant to controller. That moment reveals the difference between playing the game and owning the game board, between following market rules and writing market rules. It's the difference between trading assets and controlling assets. JP Morgan has reached that moment in the silver market. What they've accomplished represents the most sophisticated financial control operation in modern commodity history. While investors debate whether silver markets are manipulated, JP Morgan has moved beyond manipulation into something far more powerful. Comprehensive market control through simultaneous dominance of physical holdings, futures positioning, ETF custody, and price discovery mechanisms. This isn't speculation. This is documented through regulatory filings, delivery notices, custody records, and their own public statements. These reveal a strategic operation spanning over a decade to achieve total control of silver pricing, supply, and distribution. Today, we're going to examine the evidence that shows JP Morgan doesn't just influence the silver market. They are the silver market. Understanding their complete control operation reveals why the next phase of silver repricing will either make them the most profitable trade in history or expose them as the architects of their own destruction. The foundation, from criminal to controller. To understand JP Morgan's current silver market control, we must start with their criminal past and how they transformed regulatory punishment into competitive advantage. In 2020, the CFTC issued an order against JP Morgan for manipulative and deceptive conduct and spoofing that spanned at least 8 years. It involved hundreds of thousands of spoof orders in precious metals. JP Morgan was required to pay $922 million. This was the largest amount of monetary relief ever imposed by the CFTC. But the $920 million fine wasn't punishment. It was tuition for the most expensive education and market control ever purchased. The order found that from at least 2008 through 2016, JPM traders placed hundreds of thousands of orders to buy or sell certain gold, silver, platinum, palladium, treasury bond futures contracts, with the intent to cancel those orders prior to execution. The systematic spoofing operation allowed JP Morgan to manipulate silver prices in both directions while accumulating intelligence about market structure, participant behavior, and regulatory enforcement patterns that would become invaluable for legal control operations. Most importantly, the prosecution revealed that JP Morgan's manipulation was profitable despite fines. The bank previously paid nearly $1 billion because manipulation was profitable despite fines. This established a crucial principle. If manipulation generates profits exceeding penalties, then fines become a cost of doing business rather than a deterrent, the physical accumulation strategy. While paying criminal fines for manipulation, JP Morgan simultaneously executed the largest physical silver accumulation in modern history. Estimates now put JP Morgan's physical silver stockpile at over 750 million ounces. Much of this was accumulated between 2012 and 2019, when silver was stuck between $14 and $20. This timing reveals strategic brilliance. JP Morgan used their manipulation capabilities to suppress silver prices during their accumulation phase, then stopped manipulation once their physical position was complete. 750 million ounces represents approximately 75% of annual global silver mine production. No individual entity has ever controlled such a massive percentage of a strategic commodity's annual supply. But physical accumulation was only the first layer of JP Morgan's control strategy. They simultaneously positioned themselves as gatekeepers for other investors' silver exposure through ETF custody arrangements, the ETF control mechanism. JP Morgan serves as SLV's primary custodian. The SLV ETF holds approximately 500 million ounces of silver, making JP Morgan the custodian of the world's largest silver investment vehicle. This custodial role provides JP Morgan with perfect intelligence about investor silver demand, redemption patterns, and flow dynamics that affect physical silver availability. More importantly, BlackRock amended the SLV prospectus with critical language. Authorized participants may not be able to readily acquire sufficient amounts of silver. The trust may suspend or restrict the issuance of new shares. This amendment essentially gives JP Morgan veto power over new SLV share creation by controlling silver availability to authorized participants. When silver becomes scarce, JP Morgan can restrict ETF supply while benefiting from higher prices on their massive physical position. The futures market dominance. Beyond physical holdings and ETF custody, JP Morgan dominates silver futures, trading through both proprietary positions and client business. JP Morgan aggressively positioning to take maximum delivery. Over 1,000 contracts that day, and thousands month to date, went to actual delivery, sellers providing real silver bars from approved vaults, buyers taking ownership. This delivery activity reveals that JP Morgan uses futures markets not for financial speculation, but for physical silver acquisition and distribution control. COMEX proprietary plus brokerage, estimated $196 MMOZ based on exchange data aggregates, indicates that JP Morgan controls futures positions equivalent to nearly 20% of annual global silver production. But their futures dominance extends beyond position size to market timing and coordination that suggests advanced knowledge of price movements. The perfect trade, crash, and recovery. JP Morgan. Its most revealing display of market control occurred during silver's crash from $120 to $78 in January 2026. JP Morgan allegedly closing a huge silver short at the exact intraday bottom of the biggest silver crash in 44 years is the kind of detail that makes even veteran metals traders sit up a little straighter. The precision of this timing reveals more than exceptional trading skills. It reveals coordinated control over multiple market mechanisms simultaneously. When you add in the London Metal Exchange going dark, HSBC's systems going offline, and a sudden aggressive CME margin hike on the same day, the story stops looking like volatility and starts to look like an allegedly engineered reset of the paper silver market. This coordination across multiple institutions and exchanges suggests that JP Morgan's control extends beyond their own trading to influence over market infrastructure and regulatory mechanisms, the information warfare campaign. JP Morgan's market control includes sophisticated information management that shapes public perception of silver markets. Quote, Jan 5, 2026. Silver's outperformance warrants mean reversion pressure to reach 2026 target weights. JP Morgan Global Research. This public guidance occurred while JP Morgan was simultaneously accumulating massive physical positions and closing short positions at market bottoms. They were telling the public to expect lower prices while positioning for higher prices. JPM Jan 2, 2026. Greg Shearer, head of precious metals. At JP Morgan, programmatic mean reversion and index rebalancing will likely exert downward pressure on silver as it tests the $65 to $68 support levels. These public predictions of lower silver prices provided perfect cover for JP Morgan's accumulation activities and short position closure while encouraging retail selling into their buying. The supply chain control. JP Morgan's silver market control extends beyond trading in custody to supply chain influence through relationships with mining companies, refiners, and distributors. Their Bear Stearns acquisition in 2008 provided JP Morgan with extensive commodity supply chain relationships that most financial institutions lack. JP Morgan acquired Bear's entire derivatives book, including what market participants described as substantial precious metals short exposure. These supply chain relationships allow JP Morgan to influence physical silver flow patterns independently of market pricing mechanisms. When combined with their ETF custodial role in futures market dominance, JP Morgan can control silver availability at every level: mine output, refiner processing, warehouse storage, ETF creation, and futures delivery. The regulatory capture, JP Morgan's control operation benefits from regulatory relationships that effectively legalize their market control activities. Despite their criminal conviction for manipulation, JP Morgan continues operating as a primary dealer in precious metals markets with full regulatory approval. No enforcement action, indictment, or settlement from the CFTC, DOJ, SEC, Federal Reserve, or CME Group has confirmed the existence of a new manipulation scheme as of early 2026. This regulatory silence, while JP Morgan executes perfect market timing and coordinates with exchange mechanisms, suggests that their current operations remain within legal boundaries despite their obvious market control. The mathematical impossibility of JP Morgan's trading precision without advanced knowledge indicates either exceptional luck repeated consistently or information advantages that regulatory authorities choose not to investigate. The physical paper arbitrage strategy. JP Morgan's ultimate control strategy exploits the disconnect between physical silver scarcity and paper silver abundance. They have accumulated massive physical positions, while the paper market continues creating unlimited synthetic supply through futures contracts and derivatives. Physical premiums in Shanghai hit 8 per ounce, while JP Morgan controls both physical inventory and paper pricing mechanisms. This arbitrage position allows JP Morgan to profit from widening physical paper spreads, while having the power to influence when those spreads narrow through their control over both markets. When physical scarcity becomes impossible to ignore, JP Morgan benefits from higher prices on their 750 million ounce hoard. When paper selling pressure emerges, they can participate in driving prices lower while accumulating additional physical metal. The global positioning JP Morgan's silver control isn't limited to U.S. markets. They've positioned themselves in international markets where silver supply and demand dynamics are shifting toward Asia. Shanghai prices closed late December at 78 and 80 OZ equivalents, reflecting a persistent 5 to 8 Oz premium over Western benchmarks. JP Morgan's international presence allows them to arbitrage these regional price differences while controlling supply flow between markets. Their relationships with Chinese institutions and Middle Eastern sovereign funds provide access to markets where physical silver demand is growing fastest, while supply becomes most constrained. The nuclear and AI demand factor, JP Morgan's timing for silver control aligns perfectly with emerging demand sources that cannot be satisfied through paper markets. Nuclear power expansion and AI data center construction create silver demand that must be satisfied with physical metal regardless of price. JP Morgan's massive physical hoard positions them as the primary supplier for industries with inelastic demand that can afford to pay premium prices. This industrial demand provides JP Morgan with guaranteed buyers for their physical silver at prices significantly above current market levels. The ultimate control test. The true test of JP Morgan's silver market control will occur when physical supply constraints make their paper market dominance irrelevant. If global silver supply shortages become severe enough that industrial users bypass exchanges entirely, JP Morgan's 750 million ounces becomes the determining factor for which industries can maintain operations. This scenario transforms JP Morgan from financial trader to strategic resource controller with influence over industries essential for national security and technological advancement. The China factor JP Morgan's control strategy faces its greatest challenge from Chinese export restrictions and strategic accumulation. China implemented the most aggressive precious metals export controls since rare earth restrictions. Beijing reclassified silver from an ordinary commodity to a strategic resource subject to government licensing. China's control over global silver refining capacity creates a strategic competitor to JP Morgan's market control with the additional advantage of sovereign power. The confrontation between JP Morgan's financial control and China's resource nationalism will determine whether silver pricing remains under Western financial institution control or shifts toward geopolitical resource management. The systemic risk JP Morgan's comprehensive silver market control creates systemic risks that extend beyond commodity markets into broader financial stability. If JP Morgan's silver strategy fails and they face massive losses on their positions, their interconnectedness with global financial systems could transmit silver market stress into broader financial crisis. Alternatively, if their control succeeds completely, it establishes precedent for single institutions controlling strategic resource markets with implications for national security and economic independence. The inevitable outcome. JP Morgan's silver control strategy has reached the point where it must either succeed completely or fail spectacularly. Their massive physical position combined with futures dominance and ETF control creates leverage that amplifies both potential profits and potential losses. Silver's recent move is extreme. It reeks of panic buying and speculation. And if history is any guide, the farther and faster it rises, the larger the fall will be. But this analysis ignores JP Morgan's control capabilities that can influence both the rise and fall timing to their advantage. The question isn't whether JP Morgan will profit from silver volatility. Their control ensures profitability in both directions. The question is whether their control can survive external shocks like geopolitical resource restrictions, industrial supply emergencies, or currency system breakdown that make their paper market control irrelevant. The wake-up call. Understanding. On JP Morgan's comprehensive silver market control reveals why traditional precious metals investment strategies are inadequate. Retail investors who focus on price charts and technical analysis are playing a game where the opponent controls the board, the rules, and the scoring system. Physical silver ownership provides some protection from JP Morgan's paper market control, but only if held outside financial systems where JP Morgan maintains influence. The ultimate protection from JP Morgan as silver market control is different investment strategies. Its recognition that single institutional control over strategic resources represents systemic risk to the entire economic system. JP Morgan's silver control operation reveals how advanced financial engineering can create market dominance that approaches monopoly power while remaining technically legal. This control model will be replicated across other strategic resource markets unless regulatory frameworks adapt to address comprehensive market control rather than just traditional manipulation. The conclusion. Control revealed. JP Morgan doesn't just influence silver markets, they are the silver market. Their criminal past taught them manipulation techniques. Their physical accumulation gave them resource control. Their ETF custody provided them with investor intelligence. Their futures dominance gave them price influence. Their supply chain relationships gave them distribution control. Their regulatory relationships gave them legal protection. This comprehensive control represents the evolution from market manipulation to market ownership. Whether this control benefits or threatens broader economic stability depends on whether JP Morgan's interests align with broader economic health or conflict with it. Current evidence suggests their interests align with higher silver prices and physical scarcity, both outcomes that benefit long-term precious metals investors. But their control also creates single points of failure that could trigger systemic crisis if their strategy fails or external events overwhelm their control capabilities. But their control also creates single points of failure that could trigger systemic crisis if their strategy fails or external events overwhelm their control capabilities. JP Morgan took control of the silver market not through illegal manipulation, but through legal domination of every mechanism that influences silver pricing, supply, and distribution. The wake-up call is not that manipulation exists. It is that complete market control can be achieved legally and profitably while creating systemic risks that affect everyone. Understanding JP Morgan, the silver control, reveals the future of resource markets where financial engineering can create dominance that approaches governmental power over essential materials. The silver market was just the beginning. Other strategic resources are next. Wake up. The game has changed. The controllers have revealed themselves, and JP Morgan just showed everyone how it's done.